banks will close, mobs panic. It's going to be the end of the world, Bill.
Are we witnessing the collapse of the US financial system? Balaji certainly believes so. In fact, he's so confident that we're on the cusp of financial armageddon that he's betting $2 million that it will happen within 90 days. By June 17th, 2023, Balaji is predicting that the US dollar will hyperinflate and that the price of Bitcoin will skyrocket to $1 million, replacing the dollar as the global reserve currency. Balaji is calling the Fed the next FTX.
The central bank, meaning the Fed, the banks, and the bank regulators have all known for at least the past year that hundreds of banks in the US are insolvent, meaning Uncle Sam Bankman-Fried.
Even though Balaji might look like a lunatic on the loose as he holds lectures wearing shorts and Air Jordan slippers, this is a story worth paying attention to. Balaji claims that hundreds of US banks are insolvent, and Moody's has already downgraded the entire US banking system from stable to negative. I didn't even know that was a thing. Sure, you can upgrade and downgrade individual equities and debt instruments, but the whole freaking banking system? Balaji is no stranger to making bold, jaw-dropping bets. In January 2020, he predicted that some random virus from Wuhan would lead to a pandemic, spark a public health crisis, and accelerate trends such as border closures, social isolation, remote work, and distrust in governments. People called him crazy at the time, but we all know how that turned out. Balaji is not a nobody, and he has a solid track record, and the phrase Balaji was right has become a meme, a phrase some people are calling the most terrifying phrase in the English language. I don't know about you, but I feel like it's getting pretty hot in here. This is some of the most uncomfortable research I've done. If Balaji is right, it would imply the end of the United States and Western liberal democracies as we know it. I've studied Balaji extra closely this past week, listened to hours of podcasts, and devoured as much of his writing as possible. In today's video, I'll share what I learned in an attempt to figure out whether this guy is an absolute genius or a complete madman. Balaji Srinivasan grew up on Long Island in 1980s America. Inflation was at all-time highs, and Fed Chair Paul Volcker hurled the nation into 2 consecutive recessions to rein in inflation. Balaji's parents, who were immigrant physicians from India, found themselves working a lot to support the family. Balaji spent a lot of time on his own and recalls being the only brown kid in a school of 400 students. He was often ganged up on and made fun of. This taught him to fight back against powerful adversaries at an early age.
I learned very quickly that to just take the trapper keeper and go bam to the first guy really hard, and because otherwise you're just in for it, right?
He was a sharp kid and enrolled at Stanford, where he studied electrical engineering, earning himself a bachelor's degree, master's degree, and a PhD. While at Stanford, he developed a deep interest in genetics and co-founded Counsel, which he sold to Myriad for $375 million. This would be the first of his many successful ventures. Balaji later went on to build Teleport, a search engine for digital nomads, which was acquired by Topia in 2017, and Earn.com, which was acquired by Coinbase in 2018. Throughout this time, Balaji lectured at Stanford and worked part-time as a general partner at A16Z, helping the firm move into biomedicine and blockchain. Blockchain technology would become a deep passion, and in July 2022, he published the book The Network State, which proposes creating a new country by first assembling a digital community and then organizing that community to crowdfund physical territory in a fully decentralized way. Why does Balaji want to create a new country? Well, he believes America is headed towards anarchy.
I think American anarchy, unfortunately, is sort of where we're heading.
What's interesting is that Balaji doesn't even live in the US anymore. In 2020, he moved to Asia and is now splitting time between Singapore and India. Looks like he wants to watch the carnage from afar. Let's break down his theory. Balaji is arguing that the Fed, the banks, and bank regulators have been defrauding depositors for more than a year now. How? By hiding bank losses using an accounting trick known as held to maturity. You see, when you deposit money at a bank like Wells Fargo, Wells takes some of that money and lends it to others. This is what the fractional reserve banking system is all about, and it's the cornerstone of how most banks in the world operate today. Over the last couple of years, a majority of American banks took the deposit that you had in your bank account and lent it to the US government. This is perfectly normal and typically considered a risk-free investment. They do this by buying long-duration government bonds, typically 10-year treasuries. treasuries. In return, the US government promises to pay the banks an annual yield, which at the time of purchase in 2021 was around 1.5%. But the economic climate changed pretty quickly between 2021 and 2022. Inflation hit a 40-year high, and in order to tame inflation, the Fed hiked rates at the fastest pace in modern history. This sent the yield on the 10-year treasury from 1.5% at the end of 2021 to 3.4% by March 2023. This led to a massive devaluation in the bond portfolios that these banks were holding. How so? Because bond prices and interest rates have an inverse relationship. When interest rates go up, bond prices go down. If I want to buy a 10-year treasury note, I could either buy it from Wells Fargo for a 1.5% yield, or I can buy it directly from the US government for a 3.4% yield. I would rather get paid 3.4% per year rather than 1.5%, right? So the demand for the bonds that Wells Fargo bought back in 2021 decreases, and so does the value of its bond portfolio and the overall health of its balance sheet. Now, this didn't just happen to some individual banks. Balaji is arguing that hundreds of banks in America are sitting on balance sheets where their liabilities, the money they owe you, the depositor, are greater than their assets, the money that they actually have, making all of them insolvent. But how is that even possible? Aren't these banks regulated and held to strict reporting standards? Well, yes, but not enough. You see, banks don't have to disclose their unrealized bond losses if they intend to hold these bonds until maturity. Why? Because as long as a bank doesn't sell its bonds and just sits on them for 10 years until they mature, then the bank will get their full principal back. And so banks can just book these assets as held to maturity on their balance sheets and hide any losses to the public. This, of course, wouldn't have been possible if regulators simply forced banks to mark their bond portfolios to market. Meaning, as the bond portfolio loses value, the banks will need to disclose their fair market value on their balance sheets, not the value they'll get for them when they mature in 10 years. This chart by the FDIC shows how many billions of dollars in unrealized losses banks have carried over time. Things were looking fine and smooth until 2022 when the Fed started raising rates. That's when unrealized losses ballooned. The blue color represents the securities that were booked as held to maturity, which as you can see is a sizable chunk. In other words, the blue bars were hidden from the public. Okay, so what does all of this mean? To put it simply, if you as a depositor were to ask your local bank for your money back, there's no guarantee that they would be able to pay you back. The money is gone. But wouldn't that lead to mass bank runs across the country? Yes, if everyone suddenly panicked and withdrew all their funds from their banks, every bank would end up like SVB. Regulators, of course, are never gonna let this happen. To maintain stability across financial markets, they will promise that all funds are safe and that they will backstop banks who are facing a liquidity crunch. But here's the catch. If the banks are out of money, then how the hell are they going to pay you back? Well, they will borrow money from the Fed, which they're currently doing at levels not seen since 2008. The Fed lends money by printing more US dollars, which increases the supply of dollars in circulation. This is what Balaji refers to as the Fiat Crisis. Similar to how remote work grew exponentially during the pandemic, Balaji believes that this Fiat Crisis will lead to mass adoption of crypto and Bitcoin specifically. He's betting that the dollar will hyperinflate and that Bitcoin will soar in value as a second-order consequence. Why? You see, Bitcoin was born out of the ashes of the 2008 financial crisis. Satoshi created Bitcoin as a response to the growing distrust in central banks and their reckless monetary policy. Central bankers can print money as they see fit and devalue your hard-earned dollars at a whim. This is an interesting chart which illustrates the dollar's decline in purchasing power over time. Meanwhile, the supply of Bitcoin is capped at 21 million, and it's the only asset that the Fed is not a direct system administrator over. Here's another interesting chart, which shows the value of 1 USD to BTC. Looks pretty similar to the previous dollar devaluation chart, doesn't it? I think a good mental model to understand Balaji's theory is that he views the world as having two central banks, the Fed and Bitcoin. If you no longer have faith in the Fed and its ability to uphold the value of the dollar, the only other option you have is to exit fiat currencies completely by buying Bitcoin and storing it in a self-custodial wallet. Okay, so all of this makes sense to me, but what I struggle to wrap my head around is how Balaji can be so sure that this is going to play out in the next 90 days. Well, Balaji argues that hyperinflation happens very quickly, and he references this Hanky Cruz table, which outlines how fast hyperinflation has occurred in the past. Hungary in the mid-1940s authorities saw prices double in just 15 hours. For Taiwan, it took 51.4 days, which is also the longest duration listed. In that vein, Balaji's prediction of 90 days seems strangely conservative. Another key part of Balaji's 90 days argument is the fact that the Fed has announced the launch of its central bank digital currency, Fed Now, which is set to go live in July. If all American banks were to collapse except the big four, meaning Wells Fargo, Chase, BofA, and Citi, who would all then end up being too big to fail, the Fed will be able to exert a massive amount of control over these banks by saying, hey look, we got you, we'll make sure you never run out of money, but you have to follow our lead and do things our way, including using our CBDC and banning crypto transactions. This would essentially lead to the nationalization of the big four banks, which seems crazy for a capitalist country like America.
You're talking nationalization, Breton. Socialism. I have fought it all my life.
Balaji's 90 days argument is also strengthened by the increase in crypto regulation that we're starting to see. The SEC recently issued a Wells notice to Coinbase, warning the exchange that it identified potential violations of US securities law. Could the ongoing crackdown be a way for regulators to close crypto as an off-ramp in the event that USD in fact does go to zero? In 1933, FDR implemented Executive Order 6102, which required all citizens to hand over their gold coins and gold certificates to the government. So the state essentially defeated gold. Could they do the same with crypto? I don't know how you're feeling right now, but I'm really struggling to wrap my head around some of this. Everything Balaji argues makes theoretical sense to me, but if he's right, and if the dollar hyperinflates and the US government defaults on its debt, America will turn into the freaking purge. And since the US dollar is a global reserve currency, it'll be the end of Western liberal democracies as we know them. Just thinking about it gives me chills. It seems highly unlikely, right? But if you think about it, why couldn't hyperinflation play out in America? Ray Dalio has taught us that the rise and fall of empires is perfectly natural and to be expected. It's happened many times before. Argentina entered the 20th century as one of the wealthiest countries on the planet, but poor capital allocation and hyperinflation ruined the country. It makes sense why so many Argentinians are pro-crypto. Also interesting how Brian Armstrong discovered the idea for Coinbase while living in Argentina, having witnessed firsthand the tragic consequences of hyperinflation. Jack Dorsey has been sounding the alarm on hyperinflation since October 2021 and has said that there isn't anything more important in his lifetime to work on than Bitcoin. It's important to realize that Balaji and Dorsey both hold massive positions in Bitcoin, so there might be an element of this being a marketing ploy to pump their own bags, but it's also important not to instantly dismiss it as such without first properly understanding their point of view. I believe Balaji will be proven right in the long term, but wrong in the short term. By betting that Bitcoin will hit 1 million in 90 days, he's certainly sticking his head out and bringing attention to the cause, but I find it incredibly hard to believe that all of this will play out so rapidly. I do see it happening sometime in the next decade though. However, I'm also paying attention to the writings of people like Ray Dalio. In his book, The Changing World Order, Dalio writes that big devaluations are abrupt and episodic rather than evolutionary. And I like the term Pomp used recently in which he called Silicon Valley Bank the victim of a digital catastrophe. Pomp argues that the internet has been weaponized by millions of people who can collapse a bank in an instant. That begs the question, if it can happen to banks, why not entire financial systems and nations? Hope you found today's video insightful. Happy to discuss in the comments. Let me know your thoughts. I also recommend checking out this video about the collapse of Silicon Valley Bank. Thanks for watching and see you next time.